Well, if I cast myself back 7 days to last Monday, it does seem like we're talking a pretty similar story. At that point in time, I mentioned that US equity markets have been on a downward streak for 2 straight weeks. Now we can extend that by another week to 3 weeks, with US equity markets seeing another fall over the past 7 days. And investors are feeling a bit more cautious now than what they have been. Greece had a credit rating downgrade last week, and there's also plenty of other economic concerns coming out of the global economy. The New Zealand budget was released last week, and this was relatively well received by international investors, with the New Zealand government announcing that they'll be back into surplus by 2014. This has seen plenty of a demand for the New Zealand dollar, and we're starting the week off pretty strongly, trading at 79.60 against the US dollar. Well, it was interesting to note last week that some of the big US companies did see falls, and one of these companies was Gap Clothing. Now, from my experience, Gap does pretty well, and they mainly produce a lot of clothing products, and they've been doing relatively well over the past few years. However, of course, they are facing some much higher input costs, with higher cotton prices that have been apparent over the past 12 months. Of course, the raw price for cotton has effectively doubled over the past 12 months, and this has been helping out farmers, particularly out of the US economy. But on Friday, Gap announced that they are facing much higher input costs, possibly up around 20 to 22%. The real question for them is that they don't think they're going to be able to pass this on to their consumers, and they may see a bit more pushback. This is the first time that we've actually seen the real effects on the agricultural market, as so far, retailers and wholesalers have been soaking up the higher farm gate prices. Consumers have really yet to feel the burn. On Friday, investors started to question whether this will have an impact on retails, and also whether consumers can really soak it up. Perhaps they can't. Well, just like clothing retailers, it does seem like beef retailers are starting to feel the burn of a slightly weaker consumer out of the US market. Just like cotton prices, beef prices have been significantly boosted over the past 12 months. But so far, retailers, wholesalers and processors have really been soaking up the effects of higher farm gate beef prices, as opposed to passing these on to the consumer. Now it does seem like, just like Gap, they may need to start passing on these higher costs to the consumer, but the real question is whether they can really fill up this gap, and whether they can actually soak up the higher prices that we are starting to see. The US market is starting to look a little bit weaker now than what it previously had, and this is questioning whether we will see the very strong prices early into next season that we have been predicting for the last few months. Perhaps we will see a slight downward stretch, and we are starting to see a little bit more weakness than previously.